Welcome to Trading Lounge and the Commodity Futures Report for Friday, January the 28th, starting with the US dollar index here. As you know, we've been looking at wave 3 here, and an A and a B as a triangle, and wave C of wave 4 there. A little bit hard to see there. Let's just get that into perspective. And yeah, the market's really sort of pushing up nicely. So anyway, I'm just counting the 5 waves up. We've got our long trade here. I've moved the stop up to this point. I've also adjusted this here to be wave 1 here and wave 2 here, which would make sense looking at this strong 3rd wave here, 4th wave, 5th wave, yada yada yada. So yeah, further to the upside for all of this. This is the 50%, the 61.8%. We're in terms of the trading levels, we're in group 2, so minor group 2, so 96.50, 97, 20, and a little bit 22, and 1980 here. So we'll just work through these levels. We can see that the number 2 here is playing out kind of nicely here. There's a lot of other levels within all of that space there, but I won't go into all that at the moment. All I can say is that this is pushing higher here, and yeah, and we'll continue to put higher and place pressure on the commodities. Now, I forgot to do the Euro US dollar in the Euro market video, so I just need to cover that for those folks. So pretty much the opposite. This is a daily chart for the euro, so wave 3 and 4 here. We're looking at 1, 2, 3, 4, 5 down here. It could be wave 5 down here. I'll need to resolve that. We'll certainly be trading to the upside, but I won't know if it's going to be impulsive or corrective at this stage, but I will resolve that. In terms of our trade here, we've been trading this down. I've had 2 trades here. We've been short just here, covered it here, and gone short again in here. So let's just go to the 100 ticks and sort that out a little bit. 20k should be enough. Yeah, that brings us into this point here. So a beautiful trade here on this. And a couple of things we need to talk about here is that well, first of all, our target area is down at 1-1, and we can go down further. Well, we've got 2 points here. We've got this 1-1, and this is a minor level, and then we've got 1, 2, and 3 here as sub levels, and then we've got the micro levels in between that. So 1 is the strongest number in the market, so we're seeing we'll see this and this play out quite strongly here. So we can certainly bring the stop down to this point. Now these ones here, and also group 1 in here as well, so we don't need those up there. We can start to we can put that in there. There'll be a group 2 in there, so that will be I'll adjust that later. I don't want to spend too much time here, but what I did want to do here is just get you to understand that 65 close enough for the time being, and it'll be the 70, be the 80 in here as well, and that'll need to drop down into the 72 area there. So just roughly here, that will be the 80. So this is when we're talking about this number here. The swing range for that will be group 1 above and group 2 below. Okay, so in terms of trading, so you don't really want to make any hefty decisions within that particular space there. So coming down into the top of group 1 here, we're going to number 3. We're going to get a bounce. We're bouncing off that at the moment. So and also too with the markets, you always get the opposite of what you're looking at. So we're seeing a trend here, so now we're going to start seeing corrections. There's a beginning and middle and end, so these are all 1s and 2s here, and this is the middle, so this is the beginning, the middle, and we'll be trading into the end here. Now the end is going to be complicated with a lot of wave 4s, so we're seeing 4s and 5s here. So this is where it gets really messy. This is why we need to leave the stop out of the way and just chill if you want to get down lower than all of this. Otherwise, take some money off the table if you need to breathe properly, and then we'll just float on down here, and we'll keep an eye on the upside with the US dollar index. So over to the commodities, iron ore. So we've got an A and a B and a C wave here. Then we've got 1, 2, 3, 4, 5. We've got that impulse wave off the low, which is probably wave 1, but could be a wave A here. We'll just keep working both of them. When this finishes up here, we'll see a classic trading levels pattern here, and then we're going to see further upside to the 1000. Now this could be an A, B, C and fade at this point and go down for a C wave, so I won't know until we get there, and we'll resolve that on the hop. And this is important for the iron ore stocks, well, especially for the Australian side, the BHPs and FMGs and Rios of the world. And the next market is the gold market. So as you may know, we've been working through a triangle pattern here. I'm sure if you're a gold bug, you've sort of had enough of the triangle pattern. You don't want to see another triangle pattern in the rest of your life. So wave 3 here with an A, B, C, D and E wave here. So from the D to the E, we're looking for an A wave, a B wave and a C wave. So we're looking for 5 waves in this structure. This will be wave 1. We're looking for wave 2, 3, 4 and 5. Let's move into the 4-hour chart and just break that down, and also look for a trade as well. So there's wave B here. We could look at this as wave 1, and then we'll be looking at wave 2, 3, 4 and 5, moving down further for our triangle pattern here. So anyway, we don't have to worry about that too much. We just need to look for the short trade here. And if you're going to hedge, if you've got long trades in other markets and so on, or options and CFDs and all those sort of things, now that we've confirmed this move down here as being an impulsive wave, you can start to hedge and lock it all up at 1820 at that point, or be slightly net short, which is always good. You don't have to overdo it, 15, 20%, 30%, just so you've got an edge while this is going down against your positions. You've got you're making money while you're doing all that, so it sort of cheers you up a little bit, rather than sort of holding through this. I don't suggest holding through this, by the way. If you've got long positions and you're locking this up, then because even though I'm saying that we've got 5 waves down for wave C of E here, you can't trust that. I mean, I think it's right, and I'm okay with that, but you don't want to expose yourself to that. You need to protect yourself at all times with all of this. Okay, so definitely do something, at this point. Anyway, let's move into here a little bit further with to the 1-hour chart. So yeah, I'm thinking that we've got wave 1 and 2 and 3 and 4 and 5 here. It may drop down further, but the main point here is, like, don't go shorting it here because you're going to get trapped. Look, it may come down further or whatever, but what we're looking for is an A and a B and a C wave. Probably, it may reach 1830, maybe just been 1820, because this is where all the supply is, at the 1820 area here, and then drop from that point. So, but we'll pick it up on the Monday as well. We'll nail this down, and we'll sort this out as we'll get close to it. So just on the tick chart, just breaking that down here a little bit further. Let's just get in a bit more data here. So I just counted this quickly, so it could be wrong, but I was thinking wave 1 here and 2 here. That could all be about 1 and 2, then 1 and 2 and 1 and 2 and 3 and 4 and 5 for third, fourth, fifth, third, fourth and fifth here. So we'll see this climb. So there's nothing really here to do today with all of this. I wouldn't suggest going long, but that's up to you. I'll be more interested in shorting this over this side over here if I'm not around and so on, but then you'll be wanting to pretty much short. Let's just assume for a moment we get it right and we get some sort of A wave here. It may not go that high either, just 5 waves in here. As a wave 2, it should be a 5, 3, 5 structure, so it may not come that high. There's plenty. Normally I look for the resistance over here, but it could be anywhere in this space. So yeah, just be a bit mindful of that. But technically we can either just draw a line through here and short over here. We can short over here. If we count 5 waves up here, we can short up here, or otherwise, if we want to confirm things, we can start to look for a little 5-wave structure down here. Don't think you're missing anything, because we'll be getting an ABC back again, and then you can look to short over here. Many roads to Rome, so to speak. Doesn't matter what you're doing, as long as you know what you're doing, and down further. So getting, when you think about it, this is the closest largest number. This is group 1, and there'll be group 2 below that. You really want to get a small position up here and a small position over here, and then a small position under group 2 here again, and so on. To catch wave 2 to wave 3 is what we're really sort of on about with all of this. So that means Silver's going to also move to the downside, as we mentioned yesterday's video. So yep, the thing here, yeah, so we'll have to look at this as 1 and 2 and 3 and 4 and 5 up here as an ABC, and we'll be looking for 5 waves down through here. It could count a little bit differently. I don't want to go in here on the intraday and look at this today, but more interested in the low here when it comes into play. So anyway, in gold we're looking for 5 waves down. We'll be doing the same with silver, not that they have to mirror each other exactly, so just be a bit mindful about that. But the stochastics is sort of setting up for a flick back there. I would probably, just looking at this here, it looks like we've got 1, 2, 3 here, so a little wave 4 and wave 5 to come down, and then the ABC, and then down and so on at that point. So yeah, we can just tweak that up as we go. So yeah, not interested in trading silver short or calling any trades on it. I don't trade it personally, but down here I will focus on it to get it right, and we will build in through this space in line with gold at that point. Okay. Rightio, over to crude oil. So with crude oil, we're looking for wave 4 to wave 5 here as a wave 1 and ABC back for wave 2. We can view it a little bit differently. We can also view this as wave 1 and 2 here, and then wave 1 up here, and we'll have a smaller wave 2 coming back. But we'll work through that. Currently, we're just working through this move up through here. Wave 1 and 2 is fine. Wave 3 and 4 is a little bit short. We could probably extend that a little bit higher. But anyway, as it goes, we are looking at the 100 ticks. So let's get in a bit of data and pick this up. Okay, so from wave 2 down here, we've got 1 and 2 and 3, 4, 5. So it's also a little bit small as well. But anyway, I've just counted it very conservatively, and if I need to change it and extend it higher up to $100 rather than $90, then I'll do that. But I'm just accounting for every single wave. So wave 3 here, an A and a B and a C as we work through. And then we're working up here. So we've got 1, 2, 3, 4, 5, bit of a wobbly old wave 1 and 2, and then 1 and 2 and 3 and 4 here as a little ABC. So we got that right. We're looking up for wave 5 here. So that's in play. Wave 3 here, an A and a B and a C. They could be counted a bit differently as well. So I'm moving the stop under this low here. So from here we'll be looking for an AB, a pullback in here, and 3, 4 and 5. It'll probably stretch up to the 90 up there. We'll see how that plays out, but that's our target up there. And if I see this pull back here in a corrective pattern, well then I will extend it up, because I know that the market would really want to get to the $10 mark up here for all of that. So yeah. And plus a few problems here. The wave 4 here is a little bit small. This wave 4, this wave 4 here would be better suited with this minute degree wave 4, but I can't go there yet. I need to validate everything, and I can't validate that. I can validate that, but not that. So we're just steady as she goes. But yeah, look, we're just counting everything here, and everything's sort of looking okay. You may have taken a percentage off here, but we'll stop there. Looks like a nice corrective pattern here. This looks kind of impulsive. Let me just check on it. So is that 1 and 2 there, or part of that? Looks like it's part of that, doesn't it? 1, 2, a little bit dodgy, but anyway, we can look at that as 1 and 2. Yeah, that looks okay. So let's just pull this back in here to its level. Don't need that. So what that was that structure. So what we need here is 1 here and 2 here, and we can look at this as 1, 2, 3, 4, 5 as an impulse wave. So we've got that as the A wave, the B wave, and the C wave here, and within that we've still got further to come down. This is wave 1 and 2 here, 3, 4, 5. So it's good. Will be, what's this here, 650. So this, we're in sort of group 2 area now. So there will be a wave 4 here and a wave 5 here coming down, and then there'll be a little classic trading levels pattern to the upside here. So that will leave you like this. That means that you can, if you want to add to your positions, you can do that through here on that. So make sure you get that pattern right there and get your setup right. So it'll look like this. Just bringing that over to there. Just get that in there. So that will be at the 86.50, the lower end of group 2, 86.50. So you want the arrival, the reaction, the first high above the level. Don't go chasing this. And then there'll be an ABC here. That's your reference point to go long, bring it down to here, and then you can also bring it to here. This pattern here will also be a classic trading level pattern within its own right as well, the same as this bigger picture here. So the arrival, the reaction, the first high above the level, little ABC, and start to move on. You can also look to add along the way within group 2, which is 65, 72, and 80 here. There's a lot of other levels in here. This is just at minor degree. So 86 is important, which is out of the realm at this point. So 87 is important. And, you know, 87 to 80, 88 here, the 100 points here. Then you've got smaller levels of 10, 20, and 30 that make up group 1. Then 50, the midpoint. Then 8 here. When you talk about 8, you can also talk about group 2. So 65, 87, 65 here. That would be the lower end of group 2. And then 72 in here. 772. So that will carry a fair bit of weight at that point there as well. Anyway, you know the levels. You can break that down. Let's see how we go. But how does this actually look as an ABC pattern? It's a little bit dodgy, isn't it? So 1 and 2, 1 and 2 and 3 and 4, 1, 2, 3, 4, 5 for the third, ABC for the fourth, fifth. Yeah, we may even come down a little bit lower. What's the 38.2% on that? So let's check on that. Steady as she goes. Oh, we're on the money there anyway. I mean, it's 38.2, so we should be there. We should be all right. If this is just a little bit dog-legged here, maybe don't overtrade at this point here. Look to build as this builds up through here. That will be a little bit safer. Okay, copper. So copper's in a triangle too, bit like gold really in that regard. So wave 3 here, and A, B, C, and then A, B, C for the D wave. And we've been looking for an A and a B and a C back down into this area through here. So very much like gold. So basically, if I was going to be wrong with this and the market was going to move up, whether we had this as a reference point to go long on, then this one, and then this one, and then this one, but we don't, because they're so close here. We'd look for another little classic trading levels pattern in here to do that, to go long at. So if I'm wrong, that's where we'll be long, and otherwise we're going to pull back down here. US dollars pushing up is obviously playing some sort of pressure on all of this to some degree, I would imagine. And if gold moves down, well, then maybe this will move down as well, and we'll pick it up from down here on this. So we're still not here yet. I mean, it's really dragging its feet, but this is, you know, this is what corrections do. You get into all of this, you lose a lot of money, you get frustrated, you get bored, and basically at this point you start, you know, you're basically thinking about giving up, and then you've definitely given up over here, and then suddenly bang, it goes, you know. So don't fall asleep at the wheel. This is where you need to be paying attention. Alrighty. So nickel, we've been looking at it as all of this up here is a series of 1s and 2s. I could be right, or could be wrong. It's kind of, you know, it hasn't really given me a nice classic trading levels pattern up here as such, but I'll just work with what we got. So if I've made a mistake, this wave 1 up here will pull back deeper, back below the level here, but otherwise from here to here we'll look at this as wave 1 and pulling back in here for wave 2. Now it's possible that wave 2 is already finished in here, but otherwise we could get something a little bit bigger in there. So let's just go in and talk about that. We're on a weekly chart at the moment, so let's just go straight to the tick chart and cut to the chase. So let's bring in some data. Overkill, it's just we're at 10, so maybe 5's good. So we've been counting 5 waves up here, if you know, 1 and 2 and 3 and 4 and 5, and So as it stands, we can look at that as wave 1, an A wave and a B wave, and we counted 5 waves down here. I know it's not labelled, but I've done that with lines and eyeballing it up. So it's possible to count this as a low, and then 1, 2, 3, 4, 5 for 1, and back for 2, and then up for 1, and back for 2, then up for 1, and A, B, C for 2. It's possible to see it up here, but we need to be making highs now above these guys to look to go long and all those sorts of things. In fact, what we do want, being at 20,000 here, which is a major level, then we've got minor levels of 1, 2, and 3 here. If we do get tested support on top of 3 here, then we're going to be moving up to 5 at that point, and we're on our way. So the safe that you can take these, but they will be risky. But if you get a classic trading levels pattern here on top of minor group 1, well, then that's the safe trade, and good to go at that point. And because that markets move quite quickly between 3 and 5 in both directions, and 5 and 8 in both directions at any degree of structure. If I don't have this right as an A and a B and a C, then we need to look at this as wave 4, and then that means that we will be looking at wave 5 coming down. I'll just remove that and do that in a different way. So if it moves down, yeah, it just doesn't look very impulsive to the downside. Anyway, we'll just watch it a bit further. I mean, I want to see this as as wave 2, as a zigzag pattern of 5, 3, 5 structure. So for that to happen, that green wave 4 needs to be in play. Obviously, wave 4s can get pretty ugly. So yeah. We'll see. If we do get another move down here, then we'll look at this as 1, 2, 3, 4, 5 here for the A wave, and then up for the B wave and down for the C wave again. So I'm just going to remove these here because they need to be moved over now. And I'll leave that there, and I'll remove that. So look, if it falls out of bed here with the other markets, then we can look at this here as wave A here. So I'll just grab this over here as wave A, and then we'll need to look at wave B over here, and then we can look at well, wave C of 2 at that point. But if it goes straight up from here, then we can look at it being in place at that point. So yeah, let's see how it unfolds. Alrighty, so moving along to yeah, we're doing uranium now. This is ETF. So in the bigger picture here on a weekly chart, we've got this here as well, I don't know what's behind this, so I haven't got enough data, but probably an A and a B, and I can see we've got 5 waves down here, but over a long period of time. So looking at that as a cycle degree, we should probably leave this at primary wave 1, but I also want to look at it as an intermediate wave 1 here as well. But we do have a nice 5 waves up here for this, so I think I might have had a look at it on the daily chart. So this is the daily chart here. So in this case, I'm just looking at it as intermediate wave 1, but it could be primary wave 1. I don't know. I just need to mull that over a little bit further. We don't need the stochastics on this. But what we're looking for here in a nutshell is we're looking for the 50-60% retracement level here. So we'll put that in here. We're just starting to work on this, so we only had it yesterday, and still need some work on it. So I can look at this as an impulse wave, and then an ABC here for the B wave, and from B to C we need 5 waves. So I can see that it wants to come down further here. I can look at this in a couple of different ways here. We've got 1 and 2. Let's go to the tick chart now and just sort of pick it up from that wave B here. There's a couple of ways I can look at, as I mentioned. I could look at it as wave B here with 1, 2, and then the 3rd wave to here, and the 4th wave in blue here, and then the 5th wave down here or down to here. Or I need to look at this as wave 1 and 2 here, and then 1 and 2 here, and then 3, 4. So I'm not sure, still need to mull this over a little bit. I would really like to see it come down. It looks like it's got little 1, 2, 3, 4, 5 here, so probably a retest, and it'll probably be something like this. So coming down into that 61.8% mark, and I can count it in different ways. But what I thought at the end of the day, it doesn't really matter. I'll figure it out along the way. But what I'm actually looking for in the bigger picture is This is the main level that we're working with. Below that we've got 18, which is a minor level, and then 1650 and the 15 are both minor level, medium levels. I won't go into why they're so close to each other and all that just yet. It's got to do with 13, which is a major level. But what we're looking for here at the end of the day is we're looking for a classic trading levels pattern on that 20 there. That's going to signal, that's going to be our safe trade to the upside. Now we can get some more risky trades, but I won't know what they are. But once this unfolds to a certain point and shows me some more data, I'll go, oh well, that's pretty obvious, I should have seen that. But I really haven't had time to mull it over, and this is chucked in a little bit of a wobbly here. This one also looks a little bit impulsive here as well, but probably an A and a B and 1 2 3 4. Anyway, we'll sort it out, we'll get there in the end. So we've done a little bit more work on this today. But it is setting up nicely. Normally there's some sort of relationship between wave A and wave C, but it just depends where that is going to be. Let's just get that in here for a moment. So there's our 5 waves to the upside. Or there's one more, is there? Let's just get some more in here. No, it's not giving me any more. Let me just go back to the daily chart first, and I'll find that number that I'm looking for. Okay, so we're looking very close to the 1650 there, so we'll just go back to the tick chart now. That's 1930. Tick, tick. So it's about there and it's about there somewhere. So we're in the 50% and the 61.8%. I'll refine that later. But yeah, I can see this is not quite finished here, whichever way I look at it. So anyway, let's allow it to land further, and it'll start to pop out at us, and we'll be able to sort of nail that last 5th wave down without too much problem, I'd imagine. And then we can get the turn and we can start to build in. We'll try to get a trade or two below the level, and then we'll start building on here. And then as we build through here, we'll be looking at, well, above 20, then we've got, which is a major level, then we've got the medium level at 25, and then 30 up here is another major level. So 10, 20, 30, 50, 80 are all in the Fibonacci sequence of numbers, but in their major levels. But here we're looking at minor levels, so we're looking at 21 here, 22, and 23. Once we get support on 23 onto the upside, a tested support with the classic trading levels pattern, then we know that we're leaving this number and we'll be pulled to this number, the 25, 5 being the second strongest number. And let's just put that in there properly, 25. Okay. So yeah, it's just a step-by-step verification, validation, risk management, managing that exposure and getting it right. Okay, so that's that. And now over to natural gas. So we'll talk about this yesterday, and we looked at some different variations yesterday. I just want to settle on this blue wave 4 for a moment. And if I'm wrong, I'll know where I'm wrong, because if I go for wave 3 here, and then we go for an A and a B and a C wave here for wave 4. For this horizontal line is the 38% retracement level, so we're in that range. So if this is definitely in 3 waves here, so this move up here would need to be a C wave, and if that's the case, we have to wait for those 5 waves to finish. Once they're finished, then we can go long above that safely. Now, it's possible that I've got this totally wrong, and yesterday we talked about how I could have it wrong by putting wave 4 here, and wave 5 here, and wave 3 here, and wave 4 here, and wave 5 here. That's the only other way that we could have that. And then we could look at this as wave 1 with an ABC for wave 2, and then moving up there further. So that's crowding it out a little bit. It's possible. Okay, so we're aware of that. That's all good. Yeah, that's great. whatever. So, but this would just be sort of, I don't know, a bit more appropriate, but you know, markets don't care about manners. So anyway, we'll go long above this fifth wave here. So let's just go to our tick chart on this and just understand that a little bit more. Is 20 enough? Probably too much. No, it's all good. So yeah, we talked about a few things here yesterday. So we could squash it all up in here and have wave C there, and look at this as wave 1 here, and then an ABC back here for wave 2, and then heading into a powerful third wave. That's one way of looking at it. We could also look at this as wave 1 here and 2 here, then this C wave here, or for wave 4, or wave 1 here. In one way or another, in both cases, being it bearish or bullish, we'd be looking for 5 waves here. We don't have those 5 waves in place yet, so we need to wait for them. If you want to go long, that's fine, you can do that, but you may get trapped a little bit further up here for that. So if we do get 5 waves up here as wave 1, we're going to see this pullback anyway, and then we can look to go long here above wave B. And we also think too that possibly there's a reasonable, you know, sort of out of left field situation that that this wave 4 here, we've got it as an A, B, it could be a wave C, D, and E over here for that. So this could turn into a triangle pattern and then have a wave 5 down. So there's some good reason just to be a little bit patient here to get this. So we'll let this develop a little bit further to the upside, and then we'll try to understand this 5 wave structure here. Yeah, I mean, if you went long here, or if you are long here, I mean, as a trader, you know, seeing this, well, this is an overshoot pattern because it didn't stop here. So the overshoot pattern, basically you still use that high to go long on, then you can drop it down to the second high, so you'd be long here with a stop under here. So we don't really talk about the overshoot pattern that much, but this is it here. So it doesn't stop at the level, but we still use that high and the second high, and then we can also use the third high over here, whichever comes first to go long on. But that doesn't really sort of help us with all of this. So yeah, there's a couple of different ways I can see that we could count the beginning of this structure. So I just really want to wait here. At the moment it's sitting, well, the 4,000 is a medium level, and then we've got group 1 here. So it's really finding support on group 1. So once it's done that, it's going to push up to the 4-5, and could possibly push higher into, after 5 is number 8, but when we talk about 8, we talk about group 2. So with group 2, it's 650 in here, and then 72 there, and we can just give that a splash of color just to give it a bit of sort of, I don't know, so you can see it better. So we know that this is just above the 38.2% retracement level. So we should be at this level with this other high here. And then we need to count 5 waves up through here. So yeah, a little bit more to go here, but we'll get the pullback and then we can go if that's going to be the case. We just don't want to, you know, get caught in this really. And as I mentioned before, the road is long here. This is just the start of it all. So if we go back to the daily chart here, if, you know, because what we're talking about here is wave 1 up here and pulling back for wave 2 either here or here for this. So we'd be looking for wave 3. So there's plenty of space up here for all of this. So we got to get it right. We just don't want to lose money before, you know, before the journey, so to speak. How's the stochastics looking? It's moving a little bit too fast, but well, it's kind of balanced. It'd be nice if it was slower. What about the weekly? Okay, weekly setting up. It's tricky business, this trading, isn't it? We know there's a signal there, but we just we don't want to be early, we don't want to be late. We just want to find take a balanced view on it, and yeah. Anyway, we'll get there. If you're long, that's okay. You'll just need to manage your exposure at this time. Alrighty, what else do we need to cover? Is that it? That's it. Alrighty. Thanks for tuning in, and enjoy the weekend. Alrighty.